Good afternoon. The market is closed. Welcome to another Wall Street Wednesday. Today is March 10th, 2021. So I'm going to give it a few minutes to let people join. I just literally logged in. Hey, John, how are you? So I literally just logged in. I see one of my Fullerton students. Always welcome. Always welcome. You guys are the ones that kept me moving forward with your questions and Professor, what's going on here? Can you explain this? Can you explain that? So I do appreciate you guys. Mike Reed, how are you, sir? I'm doing well. Thanks for asking, John. I'm doing really well. We got some rain here in Southern California. It never rains in sunny Southern California, but it's raining today. So I'm just going to give people a few minutes to join us. Of course, I'm going to pronounce it wrong, but Roblox. I know there's been some question on it, so I'm going to talk about that. Twin, how are you? Nina Colada, how are you? Ham, what's going on, Ham? How are you? So welcome, guys. Welcome. I know everyone's wants to know about this IPO, so I'm going to talk about it. Some interesting things. Roblox. And it's not actually an IPO, right? They actually did a direct listing, so really interesting. And we'll talk about it. I will talk about it. And if you have any questions, feel free to fire away. And Brian, how are you? I definitely want to talk about the commodities market. Last week we were on here and I talked about some commodities, like I always say stock. Some commodities actually have fundamentally given me a buy or sell signal, buy or short signal, and technically now they've actually started to break down or actually run up. So I'm going to talk about that a little more. I'm doing well, twin. So I'm doing well. Let's see, who's this? Rivera. So this is Richard, but it doesn't look like Richard. What do I know? All right, guys, so I do appreciate you coming. I see I got 11 people on here. So let me start with a couple things. I know you guys, thank you, Ham. I'll take a look at that later. I know you guys want to talk about Roblox. I don't even know if I'm pronouncing correctly, but I'm going to take a look at it. Mike, what's up? Mike Brown. So I'm going to take a look at it. And actually, I'm going to talk about it. I took a look at it. So you guys know that it was a direct listing. So I'm talking about Roblox. Oh, before I go any further, which you always got to do, just a quick reminder. These are my opinions and my thoughts. They're not to be used as a buy or sell signal. Now, I'll tell you what I'm doing. Doesn't mean that you should follow me. Whatever I'm doing or what I'm talking about, you should discuss it with your financial advisor before you make any recommendations. Just a quick reminder, I actually still hold a couple licenses, but I'm not active. So therefore, I'm not in a position where I can actually give advice or give anything or tell anybody what to do. All right, so I knocked that out, put that away. Excuse me. So this Roblox, you guys probably know it from playing the games and so forth. I'm looking at this thing from an investment standpoint. The company went public. It was a direct listing. What that means is that the investment bankers did not get the institutions involved. Excuse me. On a direct listing, what that means is when the stock starts to trade, which it did this morning, we all can go in and buy and sell and do what we have to do. So that's what happened with Roblox. Now they were, excuse me again, they were scheduled to go public and they decided to do a direct listing. Direct listings have certain advantages, and that advantage is that people like you and I have an opportunity to get in at a price, quote unquote, that we normally can't see. Now, even though they did say that this thing was going to be priced at 45, as you guys know, I believe it priced at 45. Hold on a second, let me get the opening. And it opened up at $70 a share. So 45 price and $70 a share, really good. One of the things I did look at is most of senior management and most of the founders did not sell stock. There was one gentleman that sold stock. In terms of what was going on here. So they did make that stock available to the public. All right, so here's what's going on. I looked at the financials on the company, did some reading and some research on the company. I do apologize. I told you guys I'd write something up. Had a crazy week and weekend. I did my research. And then as I looked at this thing, there was a lot more to write up than I had the time to write up. Not that it's an excuse. So, and looking at it, a couple things. One is, like a lot of these startups, a lot of these companies, and actually it's not a startup, a lot of these companies, they're not making any money. So net income is negative. Operating income is also negative. So the business isn't making money. Now, for those of you who don't know what's in terms of what we do, when you have a company that's not making money, what we do is we work our way up the income statement till we can find a cash flow that's consistent. All right. When it comes to, and feel free to correct me if I'm pronouncing this wrong, Roblox. I'm just going to call it Rob for now, Roblox. All right. I'm trying to get there. And looking at their financials, their revenue has been increasing. Nice growth rate in the revenue, but they're not making any money. Operations are not generating any income, neither is there any net income. So that's the first thing that I looked at. Not a bad situation, but at the same time, you're wondering, this company's been around for a while. Supposedly they have some technology, the 3D and what they're doing. So that's interesting. The other thing I looked at was the daily DAU, monthly and daily users. Their monthly and daily users are actually down this year from the previous year. The other thing I looked at too was that the length of time that these people are staying online has actually come down. Now, what's interesting about that is when the pandemic's over. Now, I do apologize. I just got a weak signal, so if I fade out, let me know and I'll come back and I'll try and repeat what I just said. But the company itself, we're seeing an increase in users because they are locked in and we're in a pandemic. So in other words, more of us are spending more and more time on social medias, on TV, on these applications that we can watch and use at home. The challenge I ask you is, going forward, knowing that it looks like we're on the way down in terms of being able to go out and socialize. One is, do you think those users, in terms of length of time, are going to stay as high as they are? Now, they've already started to come down. Now, here's the big one. When you value a company, and I talked about this during the .com stocks back in 1999, 2000, there was no cash flow. There was no income, net income. There was no operating income. So what we did back in 1999, 2000 with the .com stocks, we worked our way up the income statement till we could find a positive cash flow. And the positive cash flow that we found was price to sales. All right. So in essence, for every dollar in sales, what's the price of the stock going to be? Most companies will trade at 10 times sales. All right. So for every dollar in sales, you're looking at a $10 stock price. Your more aggressive growth companies, your tech companies, Apple, Facebook, I went and did some checking, Netflix, even when they were making their runs, they were trading at, most I've seen was 18, 19, 20 times revenue, sales, price to sales ratio. All right, here's the number. With Roblox, it's trading at 42 times sales. The last couple of stocks that we saw that even got close to that, one of them was Snowflake. And as you know, with Snowflake ran up to 400 and then basically it pulled back, and now it's trading in the mid 200s. So I guess what I'm saying to you is, fundamentally, I don't know if this company can meet the projections that Wall Street's putting on it. I don't know if they can deliver being a $70 stock, which gives them, I believe when I looked, I'm going to look again, so bear with me. I'm looking right now. I'm just looking to see what market capitalization is. Now, for those of you who don't know all this I'm talking about, do not worry. It has nothing to do with you making money. All right, bear with me a second. I'm just pulling RBLX. And what I mean by that is, bear with me one more second. Market cap. Oh, come on. I just said, what do you mean it's not available? You're not giving it to me. All right, last I checked, I think market cap was 35 billion at this level. I have to do some checking. I don't see it. So what I'm saying to you guys is this. Fundamentally, the stock should not be trading where it's at. Fundamentally, stock is probably fairly valued at $45 a share, $40 to $45, maybe even a little lower than that. So what you're seeing now is, and this is one of the things that I always caution you guys about, there is so much hype in this stock, so much demand in it, that they ran it up the first day. All right, so the stock ran up as high as 74 and change. Looks like it closed at 69 and change. The thing we got to look at now is to see how it trades over the next couple of days. I'm telling you right now, the stock is rich. All right. Could we see a run up to the $100? Sure. And the reason we could see that run is because a lot of people are into this stock. A lot of people are buying the stock. Volume is tremendous. I'm looking at the volume right now. So a lot of people are into the stock, and they could push it. We saw this with Tesla. Tesla stock got pushed and pushed for years, even though they were not generating any income, because net income or operating income, because their cost to build the business out was so extreme. Now, this is a software company, so their costs aren't the same. But the bottom line is it's priced for perfection is the word I want to use. I actually, right now, I'm on the sidelines. I'm not now. I'm going to watch it trade. The other thing I'm going to say is I really, in general, have no problem going short. But let me caveat that. Over the last 2 or 3 weeks, I've been nervous getting short. I just haven't really gotten short. And the reason being is because every time I look at some of these shorts and I think about getting short, I know that the Reddit guys are out there pushing and pushing and pushing. The Reddit guys pushed, was it cost today? They pushed that thing up today. You got, who was it? GameStop right now broke 200 and change. You know, it had a volatile swing, but it broke 200 and change today. It was up. In fact, what did it end up closing at? I'm going to look for it now. But the bottom line is, oh, 1 second, wrong chart. Let's go to a daily chart. So today on GameStop, oh, this is interesting. Today on GameStop, stock was what? Today on GameStop, stock has been as high, today was high as $348, as low as $172. Wow. And then closed pretty much right where it opened. And this stock had been shut down 2 or 3 times today, stopped trading. So I guess what I'm saying to you is, again, anything's possible because GameStop is only worth about $20 a share. So I do expect Roblox to actually come down in price. I would play it to the short side, but again, I'll wait. Now, with that said, could we see this stock get run up to $100 over the next day or two because of investors hyping about wanting to own the stock? And the answer is yeah. But the bottom line is I think it's going to pull back and trade sideways, and I think that's going to be healthy for the stock. My opinion, for what it's worth. That and, what's the saying, that and 25 cents will buy you a phone call. Well, you guys don't know what a payphone is, most of you. But that's what I see. All right. So again, Milligan, this is me speaking. I'm going to watch the stock trade. If the stock pushes through that 74 number, which was the old high, 74 and change, if it pushes through that 74, I might buy some looking for a short-term trade. I really think the stock is so ahead of itself that I'm not going to stay with it long. If it does push to that 74, I'm going to jump all over it. I'll ride it. And then once I see some type of pause or back, you know, I probably won't stay long. Probably won't stay long the stock longer than a day or two. I really think that's what's going on. The other thing I'll say is near term, also you got 2 levels. So let me give you the 2 prices. One is the $74 number to the upside. And the other number is, bear with me a second. I just need to pull up, I'm looking at the chart. The other number, believe it or not, is this. That stock breaks $60 a share. That stock breaks $6 a share, it's probably headed towards 45. So you got 2 numbers. I'm giving you 2 numbers. To the upside, 74. If it goes to 74, buy it, trade it, take some money. If the stock breaks below 60, which was the $60.89 was the low, I'm on a 5-minute chart. So the first 5 minutes when the stock opened, the first 5 minutes, it went down as low as $60 and change, $60. So that's my number. If the stock breaks $60, I'm going to get short the stock and look for it to actually trade towards 45. And you already know what I'm going to say. If the stock breaks 45, you know, no telling where it's headed to. So that's my thought. That's what I will and am looking to do on this stock. Hey, G2, how are you, sir? All right. The other thing so that's my thoughts again on Roblox. And again, that's my opinion. Again, if you decide that you want to do anything with this, make sure you speak with your financial advisor, your wealth advisor, your broker, before you do anything. In other words, real simple. If it doesn't work, don't come back to me. Don't blame me. Be a big boy, big girl, and handle your losses. All right. Now, with that said, I want to jump to the commodities. And the reason why I want to jump to the commodities is last week I did something I normally don't do. Last week I gave you my list of commodities that I thought were either going to go higher or go higher or lower, long or short, based on fundamentals. Last week I looked at a couple of them and said, technically, they've already started the move. All right, so I've never done that before. I've said to you guys, I said, look, here's what's fundamentals. I would apply some technicals to it, but here's what I see. Here's what I'm looking for. And I've been pounding the table on this for the last couple of days, and it's still happening. And it's one of the reasons why I think we're seeing so much volatility in some of these securities going forward in the market too, is the dollar. The U.S. dollar it started running. I mentioned that last week that it had actually, broke through its 10-day moving average to the upside, and it's done nothing but continue to move higher. So on my long recommendations, I'm still recommending on the long side, stay long the dollar. The other one that I recommended, I said to you guys, I thought was going to trade really well, is again trading really well. So on the long side, I still like the dollar. I still like the 30-year Treasury bond. And by the way, just so you know, it's really interesting. I had this conversation with some of my students this week. You guys do realize that as Treasury bond prices go up, yields go down. And so my comment to them was, I'm not sure how much lower these yields could go. I said, now I understand what, they're moving it, but this is crazy how lower yields are going. Now, one of the things that we do know is that the Fed's been in there actively buying back fixed income investments and buying back some fixed income ETFs. Their buying is pushing prices up, could be pushing prices up and actually forcing the yields to go down. A drop in yields on the Treasury, 30-year Treasury, the increase in the value of the dollar is hurting foreign investments. All right, it's going to hurt foreign investments. It's making our goods and services more expensive for them. Now, as I mentioned this to you last week, and I mentioned it again today, so I'm giving you my commodity update. I'm giving you a little more color. I also mentioned last week that I would be short a couple of the currencies. And again, the Aussie dollar, the New Zealand dollar, and the British pound both have technically started trading below the 10-day moving average. They started that last week when I put them on the list. And they continue to look like you should still be short those. So again, for those of you that like to do the pairings, I don't do pairings. I just go straight currency. Either I'm going to go long a dollar, short the dollar. I'm either going to go long the British pound and short. I don't do the pairings. But those of you doing pairings, I would look for pairings with the dollar and either the British pound, the Aussie dollar, or the New Zealand dollar. I mean, that's the pairing. I mean, that's what I would look for. What else? On the short side, corn, soybean, and wheat. They've actually started to break down. Stay short. Stay short. If you got short, stay short. If you're looking, they look like they are breaking down. Now, let me tag onto this a little bit. When I talk about commodities and I talk about long or short, I'm not talking about a day trade. I'm not talking about a 2 or 3 day trade. I'm looking for a trend reversal. All right, which means that I'm looking for some positions that can give me a 300-400% return. And those of you who understand commodities and understand the options on commodities, understands the amount of leverage you get. All right, so these things can really, especially when you're looking at reversal. The thing I'm going to add to this is, if you decide to trade commodities, 2 things. 1, I highly recommend you do your best to buy time. Put time on your side. 1. 2, if you've never traded derivatives before, do not write anything. Only buy calls and only buy puts. If you have no idea what I'm talking about, you're the one I'm worried about. All right. If you have no idea what it means to write an option, let me put it this way. If you're writing options, your loss is unlimited. Boom. Your loss is unlimited. If you're buying options, if you're buying a call because you think the underlying asset's going up in price, you're buying a put because you think it's going to go down in price, the most you can lose is what you paid for the option. This game that we're playing, this thing that we're in, you got to understand the rules. And the rules are protect yourself. Your goal is not to lose the game on one shot or one pass. The goal is not to lose all your money trading. All right? The goal is to make money and minimize your downside, minimize your losses. So again, if you decide to use derivatives at all, for those of you who have no idea what you're doing, but you kind of say, I'm into this, as you learn, just buy calls or puts. Don't do anything else until you understand what's going on. All right. Let me add to my short list some more. Lean hogs, live cattle. They have not broken down, but cotton. I put cotton out last week. Cotton's breaking down. Cotton's already started to break. It's below its 10-day moving average. Coffee, below its 10-day moving average. It already started breaking down. Sugar, another short. It's already started breaking down. If you go look at any of these commodities, I'm telling you they're breaking down. They've already broke below their 10-day moving average, and we could be seeing reversal. And one of the things that could be causing this reversal, which I had told you guys about, was the fact that the dollar is stronger. A stronger dollar makes all these commodities more expensive for foreign investors. And whether you like it or not, when it comes to the grains, foreign buyers are the biggest buyers of our grain, even with China still being out of the game. Now, again, with the new president, I'm not sure what's going on with that, but the bottom line is this: I would short any of these, the ones I just gave you. So let me read the list again. The ones that have already broken down on the short side: corn, wheat, cotton, coffee, sugar number 11, British pound, Aussie dollar, New Zealand dollar. They have already started to break down. All right? They've already started the break. Excuse me. Other shorts that have not technically broke down, but fundamentally look like you want to keep an eye on them is soybeans, lean hogs. To the upside, long. Let's see, feeder cattle, gold, palladium, silver. Somebody asked me about silver last week. Silver's starting to look like it's going to fundamentally turn and start to run up. The dollar, US dollar, the 30-year treasury, and gasoline, RBOB. The ones that have already started to move, again, the dollar, the 30-year treasury bond, and gasoline, RBOB. All of those are starting to move to the upside. All right. Excuse me so much. So there's my commodities report. So again, we'll look at that. We'll talk about that. The other thing I wanted to bring up is, and you're seeing it right now, there's a disconnect between the S&P 500 and Dow and Nasdaq. So one of the things that some of you guys have already known is a thing called spread trading. Real simple. They're going to look at two assets and how they relate to each other. If the spread between those two assets moves to historically wider widths, we're going to play for these two to come back together. All right? If the spread becomes too narrow, we play for the spread to go wider. So how do you play spread trading? Well, this is what's going on. The S&P 500 and the Dow have kept going up, and Nasdaq's going down. So you've got this spread that you normally don't see between the two. How do you make money off a spread? It's easy. And when I say easy, easier said than done. It's easy. If the spread's like this, we're going to do what? We're going to expect the higher price spread to come down in price and the lower price to come up in price to narrow that spread. So how would you do that? Easy. Short the S&P and go long Nasdaq. All right? Wait, looking for them to come through. Now, for those of you who think this is risky, it's not as risky as you think, and the reason being is because there's a spread, there's a correlation between the two assets. And even though that spread might widen and narrow, it's never going to actually disconnect unless one of these securities is totally just gone off the marketplace. All right? Now, for those of you who don't know what I'm talking about long-term capital management that was doing spread trading and almost took out the U.S. Treasury. Spread trading is very low risk. The biggest risk in spread trading, again, is that the two assets that you're trading between the two might come out and go under. All right? That's what I'm referring to. Now, what happened with my... Oh, come on. My monitor just decided to go to sleep. Wake up. All right. So again, the spread between the two has widened between the S&P and Nasdaq. Excuse me, S&P and the Dow keep going up, and Nasdaq keeps going down. For those of you who don't know, Nasdaq was up most of the day, ended up closing down, I believe 5 or 10 points, but ended up closing down. I'm looking for. Bear with me a second. Let me see if I can find the market. So let's see real quick. I can give you the actual numbers. Let's see. The Dow closed up 464. Basically, the Dow closed up 1.4%. S&P was up 60 basis points, 0.6%. And where's my Nasdaq? Boom, boom, boom. Really? Where's my Nasdaq? Oh, there's Nasdaq. I'm sorry. And Nasdaq today closed down for $5. So it was up most of the day and closed down $5. So again, once again, that spread is still kind of here. In fact, with the S&P and everything going up and that going at, the spread actually gotten wider. Almost every sector, actually not almost, every sector today in the market other than technology was up. So what you're seeing now is a rotation out of the tech stocks into other areas. The other sectors, and this is interesting, today today was the most 52-week highs that we've seen in the last 3 or 4 years today. So now all that going on with my screen, my screen's pretty much totally red because I was trading the techs. I go at the volatility. But the rest of the market actually is performing extremely well. So again, one of the things I always tell you guys is when you look at these stocks, when you look at the market, one of the things that for me is that I talk about, and the reason why I said to you guys, we are not in a bear market. Maybe the tech stocks are going down, but we're not in a bear market. The other thing I'm going to say to you is this. When you have a record number of stocks setting a 52-week high, that only happens in a bull market. You do not have that happen in a bear market. All right? It's one of the indicators I use to see if we're still in the bull market. So when you have this many stocks setting a yearly high, we're not in a bear market. You might be in a bad sector if you're in technology, but the market as a whole is actually looking pretty strong and pretty good. All right, so that's what's going on there. I'm looking to see if I have any questions. I do not see any questions today, so I guess you guys, as I always say, are pretty smart. And I know a lot of you guys are smarter than me. What else was I going to tell you guys? I am not in any positions right now. I'm basically in all cash. I do have I still have 2 long-term positions. I did make a short-term trade last week. I went long. Why can I not remember this? I went long. Was it Rocket Mortgage I went long? I think it was Rocket Mortgage I went long. Yeah, it was. What I'm doing is, and for those of you who've done this before, I'm testing out a new trading strategy. And you can back test all you want. You can back test, you can paper trade, but it really doesn't really work until you actually put a couple of dollars in. So it's a small position in Rocket Mortgage. And I'm going to tell you what I looked at. I looked at 2 things. I looked at the volume one day and the price movement. And based on the volume and price movement, I thought there was going to be a short squeeze on this. They did squeeze Rocket Mortgage. Bear with me a second. I'm looking at the wrong chart. They did squeeze Rocket Mortgage. Hold on a second. Let me spread this out. Come on. What are you doing to me? There it is. Sorry about that, guys. I just couldn't see. Some of you might know this. Rocket Mortgage is all over the place. So when I go to my charts, I got to resize my chart so I can see the whole thing in Rocket Mortgage. It's been really crazy what's going on. So I was in it last week when the stock ran up to from 24, 25 to 42. I was in it. I sold it pretty much flat. The reason being is, again, in my research and looking at these, I look at the price and volume and a couple things. These stocks, typically, the volume shows up before the price movement. And then once the price movement comes, and typically when it's a short squeeze, the squeeze will last longer than a day. It's usually going to last 2 or 3 days. So I went long Rocket Mortgage looking for it to squeeze. I got in at 20, 24, believe it or not. Stock ran up to 42. Bulls make money, bears make money, pigs get slaughtered. ramped to 42. I thought there would be more in it for, over 2 days, 3 days. So I held, and the next day basically came back in. So I ended up selling it, I think, up $1 or $2. But again, experience. Looking at it 2020 hindsight, one of the things I would have done is I probably would have taken a bigger initial position and sold half that position the first day. That's what I would have did. And that's what I should have done. So again, I'm fine tuning it. And anyone that's actually fine tuned a trading strategy, you know exactly what I'm talking about when I say to you that you got to have some skin in the game. If you're just watching paper trades, you can learn from that, but you don't get the physical and emotional experience. And some of you who are new to this game, one of the hardest things to do is when you're in a position, I'm used to using Rocket Mortgage, $20, $24, and it goes to $42. You're looking and saying to yourself, should I take my profit? But what about if it continues to run? Should I cut my losses? You're not sure. And the more it goes up, believe it or not, you'll have a harder time deciding what to do with a stock that's really running in your favor than a stock that's going down against you. Stock that's going down against you, for me, is real easy. Sell it. Just get out, cut your loss. But that's what's going on there. All right. Any other questions? I'm here for you. I pretty much have said everything I have to say today in terms of what I'm doing, what's going on with the market. So I got to be careful here. Oh, one other thing. I know a lot of you people have heard buy the dips, buy the dips. These technology stocks are cheap, buy the dips. And again, I'm going to remind you of one thing. Not everything bounces back after a dip. So my point in saying all this to you is that I don't buy dips. All right, I buy runs. So if the stock is dipped and you like it, stay with it, and you're long, stay with it. If the stock has dipped and you're in the position and you want to, in your long term, hold it. If the stock has dipped down and you cut your losses or you got out, took your profits, wait for it to move back up again. Wait for it to start to run. It takes, so let me back up. In my somewhat almost 40 years of being involved in the market, I've never found anyone that can consistently pick bottoms and buy dips. I've yet to find somebody that could do it. I've seen people do it for a short period of time or for maybe a couple of months, but consistently over my 40 years, I have not seen anyone yet that can consistently buy dips. It's just impossible to do. It's just hard to do. Timing the market's almost impossible to do, let alone anything else like that. All right, let's see. Based on the COT report, a week behind, so it's lagging data. How can you make sure commercial hedges have not reversed their position if you're forward looking? Great question. I believe that's Lance, right? Lance, that's you. Yeah, I'm seeing. Another one of my former students, Lance. I appreciate you, Lance. So here's the deal, Lance. You don't know. All right? You don't know. So a lot of times when I take these positions and commitment to trade, you can't see it, but a lot of times my trades, I call it the S trade. All right? S, like the letter S. If you draw a letter S, just draw a letter S, you'll see it. Now, at the bottom of the S, the end of the tail, is typically when you get in. And my experience has been that no matter how well things look, it's typically going to go down before it goes up. Again, I'm looking for a major reversal in this commodity. I'm not looking for a quick trade. I'm looking for a reversal. So a lot of times I get in and it still goes down a little further. And then it turns and goes up. And then it gets to the top of the S and it curves again. My goal is to get the straight line, that 80% between the bottom curve and the top curve. I'm not trying to guess the bottom. I'm not trying to guess the top. I'm going to let this thing work in my favor. Now, these reports might be a week behind, but the other thing you got to look at too is when you look at the amount of the position size, how much is short, how much is long, they can't close that position out in a day or two. If they try and close out in a day or two, it's going to basically, you mean that the whole market, the whole group that's short or long, they all came in to buy at the same time, and they all came in to sell at the same time, and it typically doesn't happen that way. So you're not going to see what you're looking for. In other words, that's the reason why I don't use this as a short-term day trading or short-term trading idea, because the report is a week behind. Now, if you follow these markets, if you follow that commodity and you watch how it trades, you can get a real good feel in terms of the guys are covering and what's going on. And the other thing you look at too, once you get involved, you want to look at volume and open interest. Open interest in commodities is more important than volume. Oh, now, as I said that, I don't think I've ever talked about that. So I'm going to bring it up real quick. Open interest in the commodity is this. You take a position, you look, what it doesn't matter. You go long the dollar. All right? You buy one contract. Volume is one, open interest is one. Somebody else comes in and buys 3 more contracts. Volume is 3, open interest is 3. All right? Now, when you close your position, you're going to sell it. Volume will show up, but your open interest will decrease. So let's say I go back in and I sell my position. I got volume of 1. My open interest now is decreased because I close out that position. Open interest is 2. So one of the things you look at with commodities is not only do you look at the commitment trade and price, you also look at open interest. And if you look at open interest, and I'll give you a prime example. If open interest is at a high level, and we also see the institutions, the commitment to trade report, we see that the institutions have a high short position. High open interest, high short position. What it tells you is those open interest positions are open. They just initiate them. They haven't been closed. Now, if the volume is up and open interest is dropping, what you're seeing is that people are closing out their positions. All right? That's what you need to look at, Lance. So you need to go to the next level and you need to start tracking open interest on these commodities that you're looking to trade. It's going to tell you. I know in stocks we talk about price and volume, open interest, commodities, it's price, commitment to trade, open interest. Track those 3 together. All right. Great question, Lance. Thanks for bringing me around. For those who don't know, Lance is actively looking to trade in the commodities market, so that's the reason why he asked that question. For those of you who understand how to manage risk and volatility doesn't frighten you, the commodities market is a great place. The best way I can put it is, in the commodities market, within 6 months, you'll have a whole cycle. Think about this. A farmer plants corn. Within a year, it's a whole new cycle. It's a whole new crop coming up. It's a whole new weather report. Everything's different. So what happens is these industries, everything gets shrunk up into a smaller time frame. The other thing too, with commodities and derivatives, is you only have to put up a fraction of the money to actually get control of the underlying asset. All right? So again, you only put up a fraction of the cost. Some real quick math. One contract in corn is 5,000 bushels. Corn right now, let's say, is trading at $6 a bushel. That's $30,000. You can get control of that same corn contract with a call, and that call will probably cost you maybe about $1,500 to $2,000. All right, so you got control of a $30,000 asset by putting up $2,000. Now you can lose all $2,000, but you put up $2,000 and you got control of that asset. All right. And again, if you're long a call and the asset goes up in price, you can see the amount of leverage you're getting. All right. So that's why people like Lance and myself look at the commodities market. Once you understand derivatives, once you understand volatility, and once you understand how to hedge yourself and protect yourself, the commodities market is not nearly as rough as people leave it out to be. No, don't get me wrong. If you don't know what you're doing, somebody like Lance or me will pick you off and take your money. All right. Learn the rules before you jump in. And again, learn it. Excuse me. Just don't go to a website, have somebody tell you this is what you need to buy today and go buy it. You need to understand why it's going up. You need to understand why it's going down. Because if you never understand why things are working and why they're not working, you're doomed to be listening to somebody else on Reddit or someplace else telling you what to buy and what to do. And you better hope that they're right. And again, trust me on this. No one is 100%. If anybody's 100%, trust me, they're not talking to you. They're not talking to me. They're somewhere on their yacht, basically, as I call it, banking their money, printing cash, printing money, and they're not talking about what they're doing. They're keeping it all to themselves. All right? So that's what that is. Let's see. Let's see. Who else? What else am I looking here? Kevin had to hop. All right, so I'm not seeing any other questions on any other stocks, so that's what I was looking for. Any other questions? I've got 20 minutes before I have to shut down, but I can always shut down earlier. I'm just looking through and I'm seeing I don't see any questions. All right. Let me wrap this up with where and when are you teaching class? You refer to people as former students. Great question. Um, I'm looking at your name and I'm like, I'm not sure if I even want to mention that name, the name that you have here that I'm reading, that your Instagram name. So I'm going to leave that alone, especially the second half of the name. I am a full-time finance professor at California State University, Fullerton, as well as an ex-hedge fund manager and an active investor and trader. So when you hear me mention my former students, these are students I've had in class. The other thing too is, and some of you have heard me talk about this, and I promise you it's coming. I'm working on it diligently, and that is I'm working on a master class on investing and different investing and information and strategies. So that's one of the things I was working on this weekend. Again, it's taking me a little longer than it's taking longer than what I expect, but that's because I want to make sure that it's accurate, good information. So I am putting together a master class. I don't have a time frame yet, but I do have, I've already created several videos, and I'm on my way to creating a class. And I've done this before in terms of creating classes. I'm a college professor. I've created classes a number of times. And when you hear me talk about my students, I have a number of students out there who are actually on this call and who are out there actually making money in trading, doing well for themselves. So that's what I mean when I say my former students. And maybe one day, I believe it's Shana, I believe, I'm not sure. I heard somebody chuckle when I said it. But I believe that when I get it done, trust me, you'll be one of the first people I let you know, and I'll let you guys know that the class is going to be forming and when the dates are. So that's what's behind the scenes, what I'm working on. All right. And again, just a quick reminder again, my disclaimer, my lawyer is on me about my disclaimer. These are my thoughts, my opinions. If you're going to make any trades or do anything, make sure you speak with your financial advisor beforehand. Once again, these are my thoughts, my opinions. That and 25 cents will buy you a cup of coffee. All right. I'm looking again. I don't see other questions. So the one thing let me bring this and wrap this up. I have a couple of trading strategies. I trade earnings. I trade the IPOs. I trade the secondary public offerings, the SPOs. I trade breakouts. I trade commodities based upon the commitment to trade report, which I just talked about. Technical analysis with that, as well as the open interest. I also have a VIX strategy that I will use and trade. Now, all these strategies I'm mentioning, all my former students haven't heard all of them, but all my former students have heard at least one or two of these different strategies. So I talk about them all the time in class. I have some students that are doing some of them. I have some that are doing the VIX, and the VIX is pretty amazing one. That's the reason why. And some of you on this call have heard me say the VIX is giving me a buy signal to go along the market. The VIX is a really good buy signal for me, volatility index. So those are some of the strategies that I'm coming up with for the master class. Some of the things I'm going to talk about. And with that said, the one thing I want to tell you right now is that there's been very little follow through in the IPO market. Very little follow through. Now, what do I mean by that? A stock will come public, it'll run up in price, and typically when they would run in the past, there would be 2, 3, 4 days maybe of running, 2 or 3 days, 4 days of running, and then you would see it consolidate, pull back, and trade sideways. Right now, we're not seeing much follow through. And I think it's a combination of two things. I think it's a combination right now is that investors are looking at other places, and we haven't had any real great companies come public. Now, when I say great company, I'm talking about, I don't consider DoorDash a great company. No offense to DoorDash. I don't consider Airbnb a great company yet. And I say yet, DoorDash either. And the reason why I don't perceive them as a great company is because when I look at what they're doing, their models easily duplicated. All right. The only reason why you and I couldn't start a DoorDash ourselves is we just don't have enough capital to go out there and just start a DoorDash. But anybody, as you guys know, anybody can actually do what DoorDash does. All right, we've had Grubhub, we do DoorDash. So I don't see that as a great company. Yeah, they can do well, you can make money with them, but a great company is one that is basically becomes the industry standard. They move things, and they're hard to duplicate. And the reason why, Warren Buffett calls it a moat. They have a moat around them. Well, I call it, you can't duplicate them. Because if you try and duplicate them, your problem is you got to take away their customers as you try and bring them into you for you. So not only are you looking for new customers, you got to take the customer away from the guy who's dominating the market. Not easily done. So I don't consider them great companies from what I've seen. So there's not much follow through in that. All right, so that's just the nature of looking at what's going on in the IPO market. I do think that eventually we'll see some good companies. There are some really good quality companies out there that are making money, that we want to own, that the upside potential is there. And again, I'm not saying that Roblox is not that company. I'm just saying that we'll see. All right, one of the things that you always want to see is follow through. That's why price and volume is so important. Richard Rivera. I know Richard Rivera has used my VIX strategy, and Richard has also used my hedge synthetic strategy. And I know Richard has done pretty well for himself. So, hey, Richard, what's going on? All right. Any other questions? Anything going on? Anything you want me to look at? Anybody making money doing anything? Anybody losing money doing something? One of the things, guys, and this came up earlier too, and I always say this to you guys. If you have a reason why you brought the stock, that would be the same reason why you sell the stock. If you just brought a stock because, and again, I'm not saying it's wrong, I'm just letting you know. If you brought a stock just based on the fact of what somebody said on Reddit or somebody else said, if you're just buying stocks because of that, you have no idea why to sell it. All right? So the only time you know to sell it is when that person gives you a phone call and says, hey, you should sell it now, if they're going to do that. Now, what do I mean by the reason why you buy is the reason why you sell it? If I brought a stock today because of earnings, the earnings were announced, they gave me what I was expecting, the stock ran, what else am I looking for? If I brought a stock because of earnings and earnings missed, why am I still in it? If I'm buying a stock because the company is actually is expanding into China, opening up new stores, new this and new that, and they open up new markets in China, cool. A year from now, 2 years from now, I look and I say, it didn't work. They didn't open the stores in China. The stores in China aren't profitable, blah, blah, blah. Then why am I still in the stock? The reason why you buy the stock is the same reason why you're going to sell the stock. All right? That's what I'm trying to get you guys to understand. Have a thought process behind this. Not just randomly go out there and I'm going to buy stock because everyone else is buying and it's working. That's not going to work for you. The other side of the coin, too, is I want you to think about this. If you're doing what everyone else is doing, how do you expect to outperform the market? If you're doing what everyone else is doing, you become a market performer. If your goal is to be a market performer, then I'll tell you what, get off my call and just go buy the S&P 500. Go buy the SPY. Boom, you're done. Go enjoy your life. Go to the beach. Go hang out. Don't worry about reading any of this stuff and don't do any of it. It's really simple. But if your goal is to outperform the market, that's what you need to do. All right. With that said, I'm pretty much done for the day. I don't see any more questions. So I'm going to hop and get back to work on my masterclass. All right, guys. Have a great, great week. Put some money in your pocket. Hit me up and let me know what you're doing. Hit me up and ask me questions. Hit me up and tell me your success stories. I love hearing success stories. I love hearing how you guys take what I give you and make money with it. That's what this is all about, making money. So if you're using any of this and it's helping you out and making money, please tell me, let me know. And I'll continue to share ideas and thoughts. With that said, have a great rest of the week. Make plenty of money. And Professor Milligan signing out. I will talk to you and see you guys later. Have a great one.